Hey, it's Rachel, the CEO of Intrinio. We're a financial data company focused on unlocking key investment data sets for innovators so they can integrate the data via our API into apps, tools, dashboards, software, and more. We spent a decade helping companies across the world like Robinhood, FTX, Stanford, Disney, and more use our data to build next-generation fintech apps and tools. Needless to say, we know a thing or two about fintech and data. We're constantly hearing from our innovative clients about new and exciting data sets and trends. In this video, we're going to cover an up-and-coming data set that has been all the rage in the trading world lately: dark pool data. Dark pools have become very common in the investing industry and exist all over the world. Yet, many investors are still confused about dark pool trades, so in this video, we're going to break it all down for you. First up, what are dark pools? Dark pools have been around since 1979 and are privately organized exchanges designed for trading large securities. Dark pools are unique because they allow certain investors to trade without any public exposure until after the trade has been executed and reported. This alternative trading system has a powerful role in today's equity marketplace, and it can lead to several financial advantages. So next, how does dark pool trading work? The concept of dark pool trades is actually pretty straightforward, believe it or not. Big institutional investors can place greater trades and orders without exposing their information to the public, in turn providing increased anonymity and liquidity. This also means that there is no exposure while searching for a buyer or a seller, preventing price devaluation. This investing system also charges lower fees than traditional exchanges and is done between the buyer and the seller, helping these investors save money. Lastly, many of the trades that happen in dark pools are extremely large. These large block sales, if completed on a traditional open exchange, can drastically reduce the stock price. Therefore, dark pool trading technically helps reduce volatility in the markets. Next, are dark pool trades legal? Although the concept is disconcerting for some investors, dark pool trading is legal and ethically regulated by the Securities and Exchange Commission. But like most good things, the alternative trading system has been misused in the past. For instance, in 2016, both Barclays Capital and Credit Suisse Securities violated federal laws while operating dark pools. If not run correctly, dark pool systems can be quite dangerous. In this case, Barclays and Credit Suisse did not have proper surveillance and policing of their dark pool and misled subscribers. The well-known firms were hit with steep fines and agreed to settle all charges by paying more than $150 million in penalties collectively to the SEC and the New York Attorney General. The SEC regulates these systems heavily to ensure a fair, equitable, and transparent environment for subscribers and investors. So now we're going to talk about the pros of dark pool trading. First of all, lower fees and more cost savings over time, complete privacy while trading, avoiding price and market movements, access to huge liquidity, and increases in overall market efficiency. Next, the cons of dark pool trading: possible abuse and unfair practices, lack of transparency. Now we'll jump into some use cases for dark pool data. Like any transactions that might happen on a traditional exchange like NYSE, NASDAQ, or CBOE, at the point of execution, the transaction is priced. This in turn creates data exhaust in the form of stock prices. This data is collected by the main SIP providers, NASDAQ and NYSE, and is typically included in any SIP feed. You'll know a trade is a dark pool trade if it is missing the exchange identifier, but filtering and organizing all of that data is a full-time job. Trust me when I say you're going to want to buy dark pool data from an experienced data provider. Investors and developers that are interested in dark pool data are most likely running strategies or building software to identify and capitalize off unique and unusual events in the markets. The most common use case for accessing dark pool data is to monitor trades off market and keep a pulse on what the big fish are doing and trying to do privately. For app developers building any investment tools, integrating dark pool data for your end users can be extremely lucrative. Dark pool data is addicting, and it'll keep your users engaged and coming back for more. So, for example, your users might also benefit from accessing some of these unique data sets: insider transactions, institutional holdings, unusual options, or maybe even congressional trades. All right, does Intrinio offer dark pool data? Intrinio does not offer dark pool data at the moment, but we have had so much demand for this data from our users that we're building a data package for this as we speak. It's in the works. So please be sure to sign up for our newsletter by clicking in the link below in the description subscribe to this YouTube channel, and follow us on social to stay up to date with our product launches, upcoming webinars, and more. If you're interested in getting early access to our dark pool data feed, message our team today on our website, www.intrinio.com. And if you're looking for a range of reliable financial data products, reach out today to find out how Intrinio's data and API can help power your platform. If this video was helpful, please give it a like and subscribe to our channel for more content like this. Thanks for listening.